The crypto winter, or recession, is nothing but the survival of the fittest. The 2022 crypto winter will mostly be remembered for the spectacular collapse of FTX, 3AC Capital, the Terra-Luna ecosystem, Voyager Digital, BlockFi, Celsius Network, and a few more. While the worst may be over, the crypto market is still not yet out of the woods. The ghosts of 2022 crossed over to 2023. Hello and welcome to today's video. We will focus on the crypto companies that will likely survive this recession. These companies will likely escape the fire, but they will get a few burns. Before we delve deeper, let's go back in time a bit. The Nasdaq Composite Stock Market Index rose 400% between 1995 and its peak in March 2000. However, by October 2002, it had lost 78% of its value as several online shopping companies went under and closed shop. We have seen the same script playing out in the crypto markets. On the bright side, strong companies such as Amazon emerged from the ruins of the dot-com bubble burst. The same can be said for this crypto winter. Some crypto companies and startups will emerge stronger when the financial seasons change. Do you want to know which companies will likely survive the crypto winter and perhaps become the flagships of the industry? Stay tuned till the end of the video. The financial markets borrow some of their traits from the real world. What does this mean? The circle of life is completed through births and deaths. The circle of the financial market is characterized by booms and busts. As bad as this may sound, it may even be necessary. In a way, the crypto market is a mirror of the financial market, although it adds new features that make it unique. This means that the crypto industry is not immune to busts or other events that cast doubt on its survival. The painful failures are also a reminder that some crypto companies have been designed to weather storms, evade icebergs, capitalize on new opportunities, and stand the test of time. To find this out, we need to follow the money. Most of you are familiar with the phrase follow the money, but usually associate it with political corruption or anything of that sort. For this video, following the money simply means looking at what the big, successful companies are doing. And a few companies come close to BlackRock, the world's largest asset manager with $10 trillion in assets under management. Besides the large dollar numbers, BlackRock has a lot of influence in politics, finance, and beyond. BlackRock COO Rob Goldstein had a discussion with Circle's founder and CEO Jeremy Allaire at the World Economic Forum in February 2023. They discussed their partnership and inefficient financial rails and the use of digital cash to sort out the inefficiencies. The takeaway from the discussion is that Circle is the company tipped by BlackRock to attack and address those inefficiencies. This makes Circle a top contender to survive this recession. BlackRock has been honing its digital asset strategy for some time and is now taking a practical leap forward. BlackRock's interest in the crypto sector spans stablecoins, permissioned blockchains, and tokenization of a wide range of financial assets. Goldstein highlighted that the world runs on legacy infrastructure where even payments take days. He added that changing legacy infrastructure is hard, but it has to be done at some point. This presents opportunities for tokenization in the capital markets. But how does all of this connect with Circle? Circle is a peer-to-peer payments technology company mainly known for managing USDC, the second largest stablecoin after Tether. In April 2022, Circle received $400 million in funding from a group that consists of BlackRock and Fidelity Management, a Boston-based multinational financial services company with $4.5 trillion in assets under management. The most notable development is that the funding is an indication that traditional financial firms are seeing the potential of the growing crypto industry. Circle's resilience was tested during the March 2022 banking crisis where Silicon Valley Bank, Signature Bank, and Silvergate Capital collapsed a few days apart, leaving the financial markets in turmoil due to contagion fears. Circle revealed that it had $3.3 billion stuck at Silicon Valley banks, causing USDC to temporarily lose its $1 peg as it fell to around 87 cents. Fortunately, Circle survived the banking fiasco and is operating as normal. Is this the yardstick to ensure Circle's survival in these difficult market conditions? Maybe not, but Circle has shown that it has what it takes to take on challenges and rise above them. It's still a long way to go, but it has made a good start. The second company on this list is Coinbase, a Nasdaq-listed company that operates a crypto exchange. BlackRock partnered with Coinbase to onboard institutional investors to the crypto market. From its inception, the crypto market has been the playground for retail investors. Institutional investors have largely remained on the sidelines as they wanted to see regulatory clarity and maturity before diving into the crypto industry. Coinbase has the opportunity to be that bridge, thanks in part to its partnership with BlackRock. On the regulatory front, Coinbase has clashed with the U.S. Securities and Exchange Commission as it seeks clarity from the regulator. Will this work against Coinbase in the future? Not necessarily. This shows that the publicly traded crypto company is ready to play fair and advocate for regulation that takes the industry forward. Coinbase is not the only exchange on this list. Kraken is a long-running exchange expected to survive this recession. However, it has had to run for cover after taking fire from several fronts. Firstly, the market downturn pushed the exchange to cut off 1,100 jobs, or 30% of its workforce. This is not isolated to Kraken, as tech layoffs have affected companies like Google, Amazon, Microsoft, Yahoo, Zoom, and more. The exchange also exited the Japanese market due to an unfavorable market outlook and continued price drops. Crypto exchanges have a simple business model. They make money from charging trading fees. If the trading volume falls, then their income is affected as well. However, exchanges need to find other means to generate income. Kraken was recently in the crosshairs of the Securities and Exchange Commission over its staking program. The exchange settled the case with a $30 million fine. The fine is not an admission of wrongdoing. Kraken was founded in 2011 and has been operational for more than a decade. Kraken's founder, Jesse Powell, began developing Kraken in anticipation of Mt. Gox's death, which was the go-to exchange for buying crypto at the time. Kraken remains one of the safest exchanges in the world. Kraken has survived several bear markets in its history. It is easy to say that it has mastered the art of navigating around bear market waters and landing safely on the shores. If history repeats itself, Kraken should remain standing until the bear market is over. Away from the exchanges, Ripple is another crypto company that will likely survive a recession. So what is Ripple? According to Wikipedia, Ripple is a real-time gross settlement system, currency exchange, and remittance network created by a company of the same name. Ripple is also associated with the XRP cryptocurrency. In 2020, the U.S. SEC filed a suit against Ripple Labs, CEO Brad Garlinghouse, and co-founder Chris Larson for allegedly raising more than $1 billion through the sale of XRP security. The case is still ongoing and may take some time before it is settled. Ripple wants to get a slice of the pie in the money transfer business. Ripple was built to allow banks to communicate with each other and make cross-border transactions faster, cheaper, and more efficient. This is a real utility that addresses the majority of pain points that many people go through when they exchange in cross-border transactions. Ripple is challenging the status quo. In recent years, there is a need for alternative payment rails that don't rely on SWIFT, a global messaging network for payment instructions. Ripple is the frontrunner for this. Are these the only crypto companies that will likely survive the recession? Of course not. The bear market can be a blessing in disguise as it shakes the trees and cleans the orchard. The 2022 crypto wipeout went down with several companies, and in the end, there will be strong, resilient companies that work in the best interest of the crypto sector. Regulators have also not been kind to crypto in the past few months. The draconian regulatory environment will bring the crypto community together, and the regulatory clarity that comes from it will bring the participants of the next bull market. This is the perfect time for companies to reevaluate their business models. The best crypto companies of the future are refined and polished in the fires of uncertainty, regulatory crackdown, and market downturn.